Joining us now is Mark Newman, senior analyst at Bernstein. Mark, welcome to you. 15% gain if people are
Thanks for having me.
price insensitive means it could actually be a boon for Apple, but we have to see how they respond, I guess.
Yeah, that's right. I mean, I think 15%, that's kind of where things are shaking out right now in terms of how much costs are going up based on the huge price increase for memory. And, we think Apple's going to pass those on to consumers. So some consumers may decide to delay the purchase. Some consumers may decide to perhaps buy a slightly lower spec. So we've kind of tried to assess like all of these impacts, but we still shake out at slightly higher estimates based on the strong iPhone 17 cycle. We think iPhone 18 is not going to have as much unit growth because of the higher price, but the higher price helps a lot. And so that's really where we're coming with still tweaking up estimates today.
Right. And it's hard. We're just hearing about the pressure on the consumer. So it's hard to imagine that some people aren't going to bulk and say, a phone that's 15% higher in price. I mean, it's going up, what, $150, something in that neighborhood? I mean, that's a big, meaningful chunk.
Yeah, no, it is. And we assume that there's going to be a slight downward shift in mix because of that. And also some unit growth. We had assumed unit growth of 5 to 6% for 2027, fiscal year 27, and now we've got unit growth roughly flat because of that, and that's because of this. And that's irrespective of what's going on. If you look back, what's going on right now, one of the reasons iPhone 17 unit sales are so strong is because of this COVID cycle just lapping itself. You've got a lot of old phones that are 4 or 5 years old, and so I think that's going to help the iPhone 18 cycle. But despite that, we've just been a bit more conservative and assumed, like you're saying, some of these cost price pressures on consumers will hurt unit growth slightly.
Yeah, it's still been one of those stocks that people feel a little bit more comfortable with amid the AI wars. And it's a bit ironic because they were blasted for not being in the race the past couple of years. Can they kind of stay on the sidelines and say, look, while you guys duke it out, we're selling iPhones pretty well. You're using all of this new technology on our devices. I don't know if you need them to ramp up their CapEx much more and do different things with Siri in order to kind of maintain this position. They had that 8-week losing streak earlier on. So have they put that behind them now?
I mean, I think this is what I wrote today in the note to investors today is I actually think we did a lot of analysis on memory prices because that's a hot topic right now. Memory prices going up and what's the impact. And so a lot of our note today focuses on that. But saying that, I still think actually a larger driver of the stock price this year is really going to be what happens with Apple Intelligence or Siri 2.0. They're 2 years late. This is the year that they've got to show something. They have announced that partnership with Google Gemini, and I'm pretty optimistic that we're going to see something pretty interesting, a meaningful step forward. I'm not saying it's going to solve all problems immediately, but I believe you're going to see a meaningful step forward this year, and that's going to help. And I think there's upside to unit growth from Apple Intelligence because people are going to want to have the latest and greatest phone. There's upside also to services because Apple could actually monetize this with the Apple Intelligence. So I think that Apple Intelligence is actually the bigger driver for the stock this year, which is, we're positive on the stock and we just increased target price today, as you mentioned.